Welcome back. As promised, Ajmera Realty, that's the stock on our radar. The stock is buzzing in trade after its Q3 operational update. The company reported healthy growth in area sold on a year-on-year basis, with collections surging 40%. Sequentially, however, there has been a decline in area sold and value as well. It slipped around 23%. To discuss more, Nitin Bavisi, who is the CFO at the company, is joining us now to discuss more. Mr. Bavisi, good afternoon. Thank you so much for joining us. Well, it's been a good performance on a YY basis as far as the operational update is concerned. Can you tell us what happened quarter on quarter? What led to a decline in sales value and volumes as well? And did you see a decline in pricing as well?
Very good afternoon. Happy New Year at the outset. And as long as the quarter on quarter sales value basis and the velocity wise kind of a thing, it is on the basis of the higher base effect, because in the first half of this financial year we had the massive launch of the very high-end product, which is the Manhattan, the next phase of the Wadala, and that's how we have seen good chunk of the velocity coming on that particular first half basis. And then after, on a consistent basis, we have now achieved the better numbers, and the cumulative numbers is far more significant as we read the year-to-date numbers.
Could you tell us what are the launches that you expect, the total pipeline of launches in Q4?
In the Q3, we have achieved 694 crore worth of the sales, and we have the robust collections of 430 crore. And to answer your about the launch, we have launched one project in this Q3, which is at Juhu location, very premium location, having about 150 crore worth of the sales revenue potential. And as we move forward, we have on a quarterly basis, sequentially in about next 3 quarters, we have about 1 million to launch with about 2,000 plus crores as the sales potential.
2,000 crores plus potential is what you're looking at, expecting them to realize in how many quarters? And when you're talking about 694 crore rupees, that's your 9-month sales that you have done here. What is FY24 looking like with all the projects that you're talking about?
As I said that, we have the launch pipeline, which is very healthy, 1 million and about 2,000 plus crores over the life cycle of the projects, respective project. And happy to say that all the 3 projects at a Mumbai location. So in terms of the price point wise, it is definitely a very average pulling up the overall portfolio pricing kind of a thing. Having said, in terms of FY24, definitely given the advanced stage of the completion of the ongoing projects like Sikova, Greenfinity and Manhattan, which is now catching up kind of a thing, Juhu, which we have sold about 10% plus kind of a thing, and we have some low hanging fruits like OC based inventory available within the portfolio. So going forward, my sense in about FY24, we should be having the further significant growth over the sales book kind of a thing. And if all goes well, I think we are very confident of achieving 1,000 plus crores as the sales book number.
Could you give us an indication of what the average realizations are for your Juhu project, as well as expected for Ghatkopar and the Central Mumbai project, and how would it compare with same time last year? Some numbers.
In terms of the overall portfolio pricing, it is definitely much more than. However, that is because of the composition of the projects. Currently, in Q3, we have achieved 23,000 per square feet on a carpet basis for the entire portfolio. Manhattan project, which is again a very flagship and the contributing high end, we have experienced a small markup. However, that's a markup kind of a thing, about 2% plus as a quarter on quarter sequentially. Rest of the other projects, we have seen a very stable price point, and which is at the advanced stage of the completion. We are prioritizing more of the velocity of sales rather than any inching of the pricing there.
Okay, so velocity is something that you're focusing on. You are talking about big launches coming up with a potential of around 2,000 plus crore rupees as well. Since the pipeline is very strong, what does it do to your debt? What is the updated number? Will you be taking up more debt, or the collections or the cash flows from the existing project will be able to finance the newer projects that you're coming up with?
As we have been explaining on the investor community, we have good land bank, and which is going to sequentially available for the production of the next phases out of that. And for the new growth acquisitions kind of a thing, we are looking at a very low capex. So significant operating cash flow and plus other repatriation is expected from the US overseas market. These are all cash flows. Significant part of the cash flows we are utilizing currently at a deleveraging level. And happy to say that from this peak level of the interest rate, that it is the apt time for the deleveraging and then get into the very leaner balance sheet going forward.
Okay, so what is the number when you're talking about deleveraging as well, and with the interest rates coming or peaking out, so to say, what is the target debt for you?
Significantly, we want to operate going forward below one of the net equity level. Currently, we are at 1.12. And in this quarter, we should be divulging the annual 9-month results, and wherein we will come back with the leveraging numbers as well.
Are you in the process of acquiring any land parcels for future projects?
Definitely, as I said, that our strategy is that of low capex acquisition, and a couple of things are at a very much at an advanced stage in terms of the documentation. So going forward, those exciting pieces of information should be also coming on the way.
Will this be Mumbai only?
Currently, yes, our acquisition focus is that of Mumbai and as well in Bangalore. But that's the the market which we believe that going to be our focus area.
Okay, so last question, Mr. Bavisi, are you looking at any strategic partners as well in any of your projects? The last update was that yes, in one of the projects you would look for a PE funding or something of that sort. Is that on the cards?
Yes, very much. One location which is that Wadala, where we have piece of I would say the deal available kind of a thing. We are at the last leg of the regulatory process at NCLT to bring the asset into SPV, and hence we are in that piece we should be looking at PE or any strategic partnership going forward.
So how much of an investment are you looking at in that particular land parcel or the SPV?
Typically, it is a 3 million commercial development. So that depends on our once the regulatory process is completed, whether in the phases or in the one go kind of a thing, that will decide the quantum of the overall investment size kind of thing.
Okay, we'll leave it at that, Mr. Bavisi. Thank you very much for joining in. That's Ajmera Realty on their plans. Slip into a break. On the other side, in our special segment, Midcap Spotlight, we'll focus on Industar. Stay tuned.